So the question says, you buy a machine for 326, is depreciated on straight line for 10 years, has a salvage value of 75. The company expects the machine to be able to generate after tax sale of 64 each for 10 years, and then it will sell it for 75. So in the 10th year, what would be our cash? What cash will we receive in the 10th year? No. In the 10th year, we are still going to get our 64, and we are still going to get an additional cash.
So it's plus. Okay, I did minus.
Yes, it should be plus.
64 plus 75. Do you want to explain to Hillary? I need to refresh my memory on this. The last.
Okay. Okay. So so go back to the question.
Are you okay, Hillary?
Okay. I'm looking at the notes, trying to find it.
Okay, so let me just explain here.
Yep.
So, first of all, it says Applied Medical Services buys an equipment for 326. It will be depreciated for 10 years with a salvage value of 75. So since we have a salvage value of 75, in order to know exactly by how much it will be depreciated every year, we need to take the price of the equipment, subtract the salvage value, then divide the balance by 10. That's how we should get the amount we are going to recognize ordinarily, right? So if I take let me work it out. I'm just talking from my head. So if I take 326 and I subtract 75, I'm left with 251, right?
Calculated.
Yeah, that's what it should be. But hold on, let's not go that route. Wait. Let me not confuse us. That's what it should be for calculation. But in this case, we're not doing depreciation. That's not the issue. What we are doing now is cash forecast, right? So what I have told you is the formula for depreciation. But what we are doing is cash forecast. It now says the company expects the machine will be able to generate cash flows after tax, the actual cash of 64,000 every year. Then it will sell the machine for 75,000 at the end of 10 years. Meanwhile, remember, they told us it would generate 64,000 for the 10 years. If they told us it would generate 64,000 for 9 years, then we can assume that in the 10th year, the only thing we'll get is 75. But here it says every year for the 10 years, it will generate 64. So when you recognize the outflow of minus 326, then we have to keep recognizing the salvage. We have to recognize 64 for every year in the 10 years. Now, the only difference between the 10th year and other years is the fact that in the 10th year, they are now going to sell it off. So it has generated the cash flow for that year. It has worked from January to December and made 64,000. And in December, I'm like, hey, I'm done with you, equipment. Take and sell. So I sell it now to Megane for 75. So in year 10, in addition to the 64 that I got, I sold it to make an additional 75. So that's the reason why we are adding 75 to 64 in the 10th year. Megane, does that make sense?
Yes, definitely. So do you understand, Hillary, or you have still some doubt?
I am following, yes. We're reading the question, and then they tell us for every year, even at the 10th year, we still have the money. So apart from selling it, we get the money. We still get the money that generate the profit. So that's why the last year we added.
Because we have, on top of the 64, we have another cash flow that entered, which is 75, because we sold it. So if you sell it, you receive cash. So that means your cash flow increase.
Yeah. Just see.
In the example,